if you are tapped out or don't have the borrowing capacity in your personal name.
Rather than relying on a superannuation fund, which basically could be underperforming.
The big major banks don't do super fund lending anymore, pretty much stopped that a while back.
Once in the fund, can't come out.
Can't come back out, correct.
Okay, so let's now talk about self-managed super funds. I guess when people think about purchasing property, the most common ways that people purchase would be within their personal name, trust, company structure, but another investment vehicle or another option to build wealth is through an SMSF or self-managed super fund. Now, just to be clear, I guess when we're going to talk about this topic, I just want to be clear that we are not giving any form of financial advice. That's just a disclaimer with that. Jeff, can you explain what an SMSF is?
So it's basically where you create a fund and you purchase a property inside your super. So the way that it's sort of assessed and looked at in the eyes of the bank side of things is it's completely separate to all your personal lending, your personal debt and liabilities, which could be quite a good opportunity if you are tapped out or don't have the borrowing capacity in your personal name.
I think the other thing as well, especially in this country, because you have the option to be able to contribute to an SMSF, especially through your mandatory super contributions, you're going to get paid that anyway, so you can use those contributions to go and purchase a property rather than relying on a superannuation fund, which basically could be underperforming.
Yep. Well, I guess if you contribute into your super as well, you do get taxed at a lower rate than obviously your normal personal tax rates. So there are some benefits there. There's some benefits when you do sell your property inside your super, and then later sort of creation for wealth down there as well.
Not that we're giving any form of tax advice. So Jeff, can you explain what's the difference between a self-managed super fund and a normal superannuation fund?
Normal super fund is when you've got a funder that basically manages it all for you. If you create your own super fund, you would obviously need to create a fund, normally then held at a bank, and then you manage it yourself. And that could be things like buying shares, it could be buying assets like a property, which is what we're normally talking about now. And then you're managing it yourself in a simple format.
And so what kind of expenses are there for having a self-managed super fund set up for the investors?
So the first cost would be something you need to chat to the accountant about setting up the fund. That could be anywhere from $1,500 probably to about $3,000 as average for a cost to set that up. If you are buying property, which is what we're probably more talking about today, most funders would want at least a 20% deposit. Some would want a 30% deposit down. Obviously, the bigger the deposit, probably the lower the rate. You might find that you need to have some leftover funds in that actual fund as well to obviously maintain maintenance costs for that property.
Also as well, what kind of lenders?
Yep, so the big major banks don't do super fund lending anymore, pretty much stopped that a while back. There are a handful of lenders that will still obviously cover down these sort of, super fund lending, and the rates are actually quite competitive. In today's market, we're probably looking with a 7 on there when we're looking at home loan rates for own occupy and a 6, so about 1% higher, roughly, 1 to 1.5 maybe.
What kind of individual or person would look to buy in an SMSF?
I guess most of the people that normally come to us have already got property already, either in their personal name or investment. They're at the level where they're fully tapped out in their personal names because of liabilities and so forth. And then they look at different avenues to buy. And because the super fund is completely separate to your personal, it's a whole different algorithm in a simple method.
And so is there a minimum amount required to set up your SMSF?
Probably about $200,000 is probably the minimum that you want to start looking at SMSF. You need to have a bit of capital in there before you start investing in it.
Okay, so what are some downsides to operating in a self-managed super fund?
I guess the general rule for super funds is most of them won't allow you to do construction. If you actually pay down the debt, you can't actually release equity like your personal name and use that to buy another investment property. So pretty much if you pay down the debt, debt's paid down. You have to sell that asset to then obviously have the funds to then be able to buy something else inside the super fund if that's what you want to do, or you just have no debt, as simple as that.
So you're saying if I've got extra cash in my personal name, I go and put that into my super fund so that I can buy a property, but then decide that I want to take that back out because I'd like to do something in my personal name, I can't do that.
Completely right. That's
right.
right.
Okay, cool. So once in the fund, can't come out.
Can't come back out.
Okay,
correct.
Cool. Good to know. So I guess in summary, if someone's looking to open up or start their own SMSF, what do you suggest? What's the easiest way to get
I think the first thing
started?
would be to reach out to a mortgage broker. Most of these lenders are only going to be available through a mortgage broker channel. We will then be able to give you some options, point you in the right direction. You will need to seek some financial advice through a financial planner. Get some advice there. You need to speak to your accountant to obviously set up your fund and then get the right direction on what the right strategy plan is to go forward.
Yep.